Welcome back, folks. We have the Dow right now down 23, NASDAQ up 12, S&P's down 2.5. We get the Fed, but guess what? We get oil. It's Wednesday. It's Thursday.
It's Wednesday.
It's Wednesday.
That's right.
It's Wednesday.
Not
Prince
quite Thursday.
Spaghetti Day.
Is it Friday? Not yet. That's right. It's Wednesday. Yes. So Wednesday, 10:30 a.m. Eastern Time. We get those crude oil EIA numbers. So here is the oil chart. Quite a run oil has had recently, right? I mean, we were flirting with 60, 61 not that long ago. We're up at 64.26 currently. We're looking at that May contract. And to zoom it in even a little bit, so quite a run even it's had this morning. So 64.23. And let's take a look at what kind of spreads we have in here as we wait for the EIA numbers coming out in 11 minutes. And I'm looking for the median analyst estimate somewhere around maybe a build of 3.25 million barrels on oil. We'll pull that up as well. So immediately I jumped in. The shortest time frames we have here are the spreads that maybe go until 11 a.m. So it's 9 till 11. They're expiring at 11. We have the news coming out at 10:30. Like we said, oil trading right now 64.25. So these would give us an option if we wanted to, and we like to set up the trades where they go both ways. Right?
Yes.
We'd be buying a spread with bullish potential. We'd be selling a spread with bearish potential. And these line up with $64. So real quick, as we take a look at this, this would give us intrinsic value to the bullish side, right? Because we're 24 cents positive
into the money
in the spread.
Yeah.
And that's going to be about 25 cents of intrinsic value with 10 cents of premium on top. So the bullish spread is going to cost us about $34. And then we use the one going from 64 down to 62.50. Each of these being $1.50.
Yes.
We'll be selling this one. Now this one we're 25 cents out of the money, right? So no intrinsic value, just premium, similar amount of premium. So we're looking at about $43.
Yep.
Okay, so those are the 11 AMs with a little bit of a bullish bias there. Now again, if you just have a straight bullish bias, you don't need to purchase, you know, the bearish one if you're directionally biased, if that's your trade, or if you're just looking for a huge run down and you want to purchase an out of the money spread, putting up $9 on that side, just to, you know, put those options out there. So, but we took a peek at this during our break.
And this one's a beauty.
Yeah, so they're all kind of beauties as they line up. But what's nice is, and these get set as they open, as in every 2 hours, and oil was a little bit higher when the 10 a.m.s got set, which expire at 12. 64.25 is going to be our point here. Now, what's nice about that is that you have very little intrinsic value on either side that you have to pay for.
And because we're looking for volatility.
Right. So this, you know, this you're going to have 2 pennies of intrinsic value to the bullish side here. This would be our bullish spread, 64.25 up to 65.75. Yep. That one's going to be costing us $24. Okay, and again, we have 64.25, $1.50 negative bearish spread would be selling this one. So we're looking at about $47, okay? Now, slightly different trades than the 11, right?
Yeah.
And that we barely have any intrinsic value. We're within 1 penny of 64.25 right now.
Right.
So each of them are just paying some premium on either side and would be putting up $47 total, and you would have until noon as opposed to the 11 a.m.s.
Right.
And then you would need that $47, or which would represent 47 cents away from 64.25 in either direction, becomes your break even, and you have profit potential for $1.50 from that level.
And what gets intriguing with that, too, is that we know many times you see it move both ways.
Oh, yes.
So you have a potential there to basically, once the news comes out, to trade both sides of it.
Definitely. You know, if it happens, let's say you are directionally bullish or bearish, maybe you get the move in your direction. Let's say we're bullish, right?
Yeah.
You get the huge move upwards. Okay, maybe you just let it run. But what if you're bearish and you get the pop upwards? That's where we've talked about it before. Maybe you take your money off, you break even, and then you look for the pullback in the next hour and a half. So we saw $47 on the noons. Now what's nice is the dailies also, the noons line up with 64.25.
Right at it, yeah.
All the other spreads are 64, which is not that bad, though, again, especially if you have a little bit of a bullish bias because you start with a head start. Yeah. So let's just take a look, because we looked at the 11 AMs, right?
Yes.
And those were $43. Right? So here, and those were for a $1.50 spread. Now, if you jump to the dailies, these are going to be $5 spreads, okay, versus $1.50. They're going to expire at 2:30, but they're going to have that same $64 price point.
Yeah.
You could be buying the bullish spread, okay, and that one. Now, this is moving around as we speak. This only has 18 pennies of intrinsic value now, as opposed to having about 25 cents of intrinsic value. And wow, it's dropping dramatically, actually, 64.10. So the comparison's not going to be as ideal when it's just holding steady. But the bullish spread still has intrinsic value.
Yeah.
That one's going to be costing you, call it 37 cents. Bearish spread is no intrinsic value, all premium, and that's going to be costing you about $21. So you're looking at about $58.
Right.
And the difference there being, instead of having till 11 a.m., you have till 2:30, and instead of having $1.50,
yeah,
if you ever got just an insane move of $5, you do have profit potential on either side of $64. So there are all your trade setups. We got less than 6 minutes till those EIA numbers come out, and let's just pull this over real quick because this is what we're looking at here. So the median analyst survey predicts the changes of crude 3.25 million barrels.
Look at that. That's interesting because when the API came out last night, it was a drawdown of 2.7 million.
Yeah. Yep.
So that's, well, and Cushing went up 1.6, I guess. So that's going to be these numbers for what the Bloomberg survey is. It's totally off as what API come out with last night.
And sometimes they do differ. They do.
No doubt.
But, it's all about expectation in terms of what the market's looking for. So that's what the market's looking for. We'll get those numbers in less than 6 minutes, and we'll see how the news reacts.
Totally.
Okay.
Welcome back, folks. That's quite a... Crude inventories fell 2.62 million barrels.
Yes.
Gasoline fell 1.69.
And so before we jump to the chart, it's always interesting. Looks like the market was initially a little surprised by that 2.62 million barrel build. And to scroll this down, we'll keep the suspense of where the chart is. Bloomberg users are expecting, this was prior to the news, a 1.875 million build. So with that in mind, let's jump back to the NADEX platform. So we were trading at 64.25 just prior to the news, right? We're up about 20 pennies from there. Here's the chart right here, currently trading 64.45. So I have the two spreads up here we were looking at for the noon. And those are the ones that lined up. Oil was right at 64.25. We were going to pay about $47 for both of them for a volatility trade, which would be 47 cents. Let's call it 50 for easy math. And that would be, so you're looking either 64.75 to the positive side or 63.75 to the negative side becomes your break even.
And we're at the positive right now. We're 64.72.
Exactly. So here's your bullish spread. This is going to be the one that has most of the value in it. And so you're looking at right now, you'd be able to close out that trade. You have value above 64.25. So again, you're looking at about $40 about a value currently, and this is where we talked about. Let's say you were bearish. This is the exact example, or
it would be. Yes.
You could close out that trade, recoup most of your money.
Then you only have 7 pennies at risk.
Exactly, and then let's say you're really bearish, you look for the pullback underneath, and this remains inactive.
And you have to noon.
Which is really cool. An active position until noon. So we'll check back in on it right now. Oil trading 64.55 on those numbers.
Gotta love it.
Yes.
Welcome back, folks. When we look at these numbers, there's a big differential in these numbers.
Yeah. So to check back in, it's 10:43 Eastern time right now. It's been about 13 minutes since the crude oil EIA numbers came out. And, this is the headline number, of course. What's the median estimate? The median estimate was about a 3.2 million barrel build. And what happened? You had a draw of 2.6.
That's huge.
You were looking for about 3 million extra barrels. We had 3 million fewer. And you have PAD 3 crude, a decline of 3.6 million barrels. Look at the gasoline, a little bit off of where they were thinking, versus expectation of about a decline of 2.4 million. There was only a decline of 1.6. Some interesting numbers, especially. We haven't seen a miss like that in the last few weeks at least.
We haven't.
And to jump back to the chart and see where oil is trading at right now, because we've been getting some volatility. So
look
currently 64.71. And again, these are 64.25 we're looking at. This is the bullish spread. That has all the value, of course, right now. And again, if you're exiting this trade, we're about at break even to the positive side now. We're putting up about $47. That would cover both legs of this trade. And of course, when you close out the bullish spread, bearish spread would still remain active for a good hour and 15 minutes. Like I said, 10:43 about right now, and you'd have value if you got that decline. If you want to let it run, you let it run, right? That's where your expectation, what you're thinking in the market, and it's not stopping right now as it continues. So we'll check back in one more time.
The cool thing is 12 o'clock.
That's right.
In this market, in any market, but 12 o'clock's a long period of time in the oil market.
Well, I mean, the move we just got in terms of 50 cents in 14 minutes, right? And it's not stopping. These are 5-minute bars we're looking at here. So quite an acceleration as we continue to rise. We'll check back in one more time before 11 o'clock for the hour.
Welcome back, folks. We have the Dow Industrials right now down 16, NASDAQ's up 7, S&Ps are down 2. Oil out there, 64.69.
Yes, and to check back in one more time, it's about 10:55, so 25 minutes after those news. I have the 12 o'clock spreads we were looking at up there, And as we peaked out there, you know, right now we're looking at, if you would sell it, that's you're getting about $45. So you're looking at almost breaking even, right?
Yep.
But one quick deal, so I pulled up the 230s we had looked at as well. Now those had a little bit of a bullish bias, right? So that's where you have value starting at $64. So of course these, you're looking at $72, $73 of value currently, because that's how far you are above $64.
Yes.
And those were costing us, I believe, $59.
Right.
And these go till $230.
That's intense.
Again, so just laying out all those options. Oil, though, getting a bid. I mean, we haven't seen these prices in a while.
No, we haven't.
Geez, what's going to happen mentally if we start getting into $70 oil again, right?
Seriously,
We'll see what happens. Okay.
Yeah, pretty wild, man.
Definitely.
No doubt about it.